Welcome back to Ideanomics. Well, we have been discussing whether the U.S. China deal has completely erased the worst possibilities of tariff wars and whether it can actually lead to some growth upgrades, at least for Asia, for China in particular. Also, what happens to yields and currencies in Asia now that the overhang is gone. Joining me are Kuijs, the Asia economist of SNP, and Mitul Kotecha, head foreign exchange FX at Barclays Bank for EM macro strategy. Gentlemen, thank you very much indeed for your time. Louis, let me start with you on the first growth picture. Any changes to SNP's growth forecasts for the global economy or for China because of the U.S. China deal?
Well, Latha, definitely the lowering and suspension of tariffs between these two large economies is a plus for the global economy and for these economies themselves. It matters a lot for China. We will be looking at that again. These things take time, changing one's forecast, so we don't do that overnight. But definitely, this is a positive for the economy. It will also, of course, probably mean a bit less stimulus necessary in China, but that's all a good thing. So this by itself is a piece of good news, even though, of course, there remain quite a few areas of uncertainty, both with regard to the U.S. China dimension and also more generally. There's still a lot of uncertainty hanging over that global trade arrangement.
Oh, yes, let's not forget that this is a 90-day truce. But Mitul, what is the sense about, first, the Chinese yuan? We saw that rapid appreciation, almost 7.18, even 1.7 on a day, on an hour. Do you expect that there will be an appreciation of the yuan that we should be prepared for? What are the ranges you're looking at?
I think at the moment, you're right. We had an initial positive reaction in the yuan on the back of the trade truce. But the reality is, I think it would be hurting China's economy if we do see continued appreciation of the currency. Now, obviously, the dollar has been very restrained. But our view at the moment is that the pressure on the dollar, the headwinds to the dollar have been fading, and we don't see much more downside from here. And so in that sense, currently, if you look at the fixings that we see on a daily basis, the PBOC sets these fixings, and they've been generally around this 720 mark. So there's no real sense here that China's looking for an aggressive appreciation of the currency in this environment. If anything, with a weaker dollar or a weak dollar backdrop, China's benefiting from some trade-weighted improvement of the yuan, actually much like the rupee has done in recent months. So in that sense, they don't necessarily have to see a stronger currency versus a dollar. But our view is still that we will see some depreciation of the yuan in the months ahead. We think that the currency is still one of the release valves of economic pressure, along with more fiscal stimulus and more monetary stimulus. Now, admittedly, the pressure on the economy is less than it would have been given the tariffs truce, but there is still economic pressure, and growth is still coming under that downward momentum without further stimulus, whether it's monetary, fiscal, or via the exchange rate.
Okay. Actually, things are pretty clear when it comes to equities because everyone's reading growth after the U.S. China deal, but it's very confusing on the currency and yields front. Louis, what are your thoughts on Asian currencies? Not just the Taiwan dollar, which I'll discuss separately, but the rupee itself has zigzagged a lot. What is the longer-term view on Asian currencies?
Yeah, I think we've seen a quite remarkable, very interesting, but also unexpected shift in currency markets in the last 6 months or so. Because, 6 months ago, everybody, all the experts were saying that if the U.S. is going to engage in, trade wars with everybody else, that will strengthen the dollar and will weaken other currencies. In fact, the opposite happened. And the opposite happened in large part, I think, because financial markets started to reprice U.S. assets compared to the assets of other economies. We've seen there have been capital flows, into Europe, into Asia. I'm not sure that this is completely over, but I'm also not sure that that we can extrapolate from this, I would still expect there to be some at least, risk and uncertainty hanging over those Asian currency markets as that situation on tariffs and what will the U.S. eventually roll out. I think that will still weigh over those currency markets. Having said that, our forecast has for a long time been that if you look at, say, a 3-year period, we expect most Asian currencies to strengthen against the US dollar from a position. In the current situation, most Asian currencies are still quite weak vis-a-vis the dollar on fundamentals. So there is some room still for further strengthening of Asian currencies.
Strengthening of Asian currencies. Actually, a previous speaker also said that, Neeraj Seth. Mitul, what are your thoughts? Is the rupee going to get stronger? First Asian currencies, but more specifically the rupee.
Sure. Look, I think I have some sympathy with the view because we wrote a piece recently highlighting the massive net international investment positions that Asia has, countries like Korea and China and obviously economies such as Hong Kong, Taiwan. And we've seen the upward pressure more recently on these currencies. You mentioned Taiwan dollar, very, very rapid move in that currency. So I think if you could see a big repatriation of this money coming back into Asia, yes, there could be some severe strength, significant strength in Asian currencies. But again, it's not our base case. We still see the dollar picking up some ground in the next several months. Even though structurally there is some shift out of US assets and shift of repatriation, which is a longer term path, we will see cyclical and large moves cyclically in that environment. And we still think the bias will still be for dollar Asian currencies to move, or dollar versus Asian currencies to move higher. And I would say similarly for the rupee. I think we're finding a sort of base around this sort of 85 level for dollar rupee. We have seen some improvement in competitiveness more in the last few months. But again, I think the RBI would probably want to avoid any real richening of the currency from these sort of levels. At the same time, I think there will be continued focus on what the CNY is doing. And I think India will focus on that. And I would doubt that we will see a move out of that sort of range that we've been in. Potentially, you could see CNH INR cross also moving, back towards sort of the 12 level where it was some time back. So look, I think that I think the downside risk on the rupee will pick up in the next several months. Not a massive depreciation, but perhaps a gradual depreciation of the rupee.
Okay. Well, actually, the market is quite deeply divided. You just heard Lewis saying that, he expects a rupee appreciation, or rather Asian currency appreciation. A lot of this confusion is coming because of the dollar. Why are you expecting a dollar appreciation at all? Trump himself wants a dollar depreciation. Is the appreciation likely because he may announce tax cuts as you get into the middle of the year?
I think, again, any appreciation is probably a lot milder than had previously been expected, for sure. I mean, I agree with the comments that, everyone had expected the dollar to strengthen on tariffs, and it just didn't happen. And now we're probably seeing better news on the US and less tariffs and less economic impact, less policy gyrations. And that actually, perversely, could bode well for the dollar. So, our view is that sentiment and positioning is really stretched negatively on the dollar, that we might start to see some better news coming through from a point of view of less extreme negativity. And that could help the dollar to pick up some momentum as we go through the next several months after being in this very oversold territory that we're in presently.
Okay. Well, let me just finish the India growth story with Lewis. Lewis, what are your growth forecasts for India? And interest rate as well. The Reserve Bank's policy is up next month.
No, I think when we look at our forecast for the different economies in Asia, the forecast for India has been among the more stable. We still we nudged down our forecast for the fiscal year, for current fiscal year, to 6.3%, but we expect growth to recover to about 6.5%, and then move up to close to 7%, in 2-3 years' time again. So we've factored in our Indian forecast the impact of that, of really all that trade turmoil. But our medium-term view on India remains pretty positive, with growth of around 6.5–7%. On the RBI, we do think that the RBI will consider there to be room for them to lower rates later in the year. We actually expect 75 basis points of cuts this fiscal year.
Okay, 75. Actually, the market is moving to the view that the end repo rate could be 5/4. But Mitul, the other big question I wanted to ask you is this Taiwan dollar appreciation and the latent fear that the US may impose non-tariff barriers, like asking people to buy 100-year US treasuries, or in some way forcing a depreciation, an appreciation of Asian currencies. Does that threat still remain?
Well, that threat definitely remains. And for example, just yesterday, or last couple of days, sorry, we had these comments out of Korea, where there had been some statement and reports that the currency, the Korean won, had been discussed on May the 5th between discussions between US and Korean officials, and we saw quite a sharp rally in the Korean won. Similarly, Taiwan dollar, there is, and I would argue the yen as well, there is some focus on whether currencies will play a part in these trade discussions. And as you highlighted earlier, some in the US administration do want to see a weaker dollar. They do believe that Asian currencies are vastly undervalued and that they should be strengthening somewhat more going forward. And that is a big risk. And I think that is one of the reasons why currencies in Asia have been doing so well lately and catching up with the moves in the broader dollar sell-off that we saw against major currencies.
A quick last one, Mitul. Why is it that the US bond yields are not coming down at all? They're remaining at around the 4.5 mark even after yesterday's fall. And if they remain at that point, what is the impact for Asia?
Well, it's a good point. And I think the risk premium, the term premium has been something that's been increasingly priced into the US bond market. The worries that the fiscal expansion in the US is going to get out of hand from a deficit that's already around 6.5–7% of GDP. There's still lingering worries about inflation risks. And the Fed perhaps not moving as quickly to counter that. So, and also one other factor remains foreign selling. We go back to the same theme, concerns about foreign selling of US treasuries. Now, we think some of these concerns are overdone. Our US rate strategists have just put out a piece highlighting that they still remain quite constructive on treasuries going out further. So, we don't think this pressure is going to be sustained. But of course, if US rates continue to remain high, that would bode quite badly for Asia rates markets and Asia overall, because of the fact that we'll see continued funding sucked towards the US. We'll continue to see perhaps some latent pressure on Asian markets because of that.
Okay, well, that remains the big question mark in terms of, how smart money will move. Thank you very much, Louis and Mitul, for joining me and explaining what is still a picture with too many moving parts. But that's it on this edition of Indianomics. Thanks for watching Chartbusters after the break.